We are now at the panel discussion on Crypto Meets OFAC, what sanctions regimes mean for the industry. Earlier today, we had a keynote address by Undersecretary Sigal Mandelker of the Treasury Department's Office of Terrorism and Financial Intelligence, in which she gave a very thorough overview of the U.S. Anti-money laundering and economic sanctions regimes and its implications for the crypto industry. We're going to focus specifically on sanctions, which, as Undersecretary Mandelker emphasized, are in all industries and all countries concerned. And the important thing the crypto industry has to keep in mind is that it has a self-interest in ensuring that it does not become one of the many paths of least resistance that exist out there for illicit finance and other illicit trade. Yes, economic sanctions in crypto are something that has been in the news actually quite a bit in the past couple of years. There has been a constant expansion of the economic sanctions programs involving Iran, Russia, and Venezuela. Likewise, those very same countries have been at the forefront of developments in cryptocurrencies in many ways. However, beneath those headlines, compliance with the economic sanctions regime has a lot of layers which are all very complicated, which don't really make the headlines. And I have with me a panel which I think is as well equipped to discuss these issues as anyone would be. I have Amy Devine Kim from the Chamber of Digital Commerce, who are leading advocates for the crypto industry in Washington, whom you're probably already familiar with. Then we have Haley Lennon from Bitflyer, a cryptocurrency exchange headquartered in Japan, which also has offices in the United States and Luxembourg, which is in the front lines of working out the implications of the sanctions regime for cryptocurrency exchanges and how to operate within it. And last but certainly not least, I have John Smith from Morrison Foerster, who spent over a decade as a senior official at OFAC, including 3 years as its director. So he is as much an authority as anyone about the U.S. economic sanctions system and what it means for industries worldwide. Now, as I said earlier, their sanctions compliance is something that's quite complicated and has many layers. And one of the things which may not be understood very widely is how many different ways it can affect various parts of the crypto industry. And Amy and John, maybe that's something the two of you can discuss. Discuss some of the major areas of the crypto industry and what they need to keep in mind regarding economic sanctions.
Well, so I'll kick it off and we'll go from there. Well, one thing I just wanted to stress too that you had touched on a little bit in your remarks, and I know Undersecretary Mandelker also mentioned, is the thing about OFAC sanctions is that they're distinct from the AML requirements and that they apply to everybody, not just financial institutions. So to me, to you, to everybody in the room. So that's one thing. I think sometimes people think if you're not in financial services, certainly you may have higher risk in financial services, but they do apply to everybody. And the second thing that's challenging, I think, in the sanctions regime, especially for this industry as compared to others, but also compared to AML, is that they apply and they attach to property or interest in property of these designated persons or countries. So I think that too presents a challenge, which maybe we'll get into in the next couple of minutes. So from that perspective, I think we getting into the specifics, I think we've seen that there's two primary places where this is applied. I'll maybe go back before that. The first is with respect to the potential for nation states to issue a central bank issued digital currency. Certainly we watch that from more of an interest in governments doing that, but where Treasury and illicit finance is concerned is when what they call rogue nations or terrorist countries looking to do it to circumvent sanctions. And oftentimes you see them reported in the news as saying that's what they're going to do. And OFAC has issued some things on the Venezuelan petro in that regard. And of course, we can't interact, US persons cannot interact with the Venezuelan petro. And then the other is with respect to designating wallets. When they've determined that illicit actors have used those wallets or have some ownership of those wallets.
I think that's a great summary. I think a couple other things that I would add to it is your first question, if you're thinking about do OFAC sanctions apply, when you say they apply to everyone, it really is a broad set of prohibitions that you first have to ask yourself the question, is there any type of U.S. nexus to the transaction? And that's what often trips people up, because they may say, well, there's not a U.S. person, so a U.S. person is one aspect of the economic sanctions analysis on U.S. nexus. I often like to ask who's a U.S. person in a room like this to see if everybody doesn't raise their hands, because we're all U.S. persons here because we're all in the United States. So we're all required to follow the rules, and any transaction that hits the United States financial system or the U.S. economy also gets you that nexus. And so that's where I think you really have to worry, is making sure not only that you're following and complying with the broad prohibitions, the OFAC list of parties that you're not supposed to deal with, also those owned by those parties that you can't deal with, but also making sure that you don't have a U.S. nexus to transactions that might violate sanctions rules, not just about lists, but also prohibited countries like Iran and Cuba.
Right, and there's two ways to look at it. Just like you said, OFAC maintains lists of specially designated nationals and block persons. Companies need to screen against that, as well as understanding if your customers or counterparties of the transaction are in some of these designated countries or even more complicated regions like the Crimea region of Ukraine.
And I think that's even where the complexities of the sanctions can really get to you, because it's not just even your direct counterparties. You have a reason to know that anyone in the chain may be a sanctioned party. You have to block, OFAC prohibitions hit directly or indirectly. So that can really trip people up if they say, well, my direct counterparty isn't, my direct customer, my direct relationship. But if you have that reason to know, then you've committed an OFAC violation.
Now, those are some of the considerations regarding the need to comply. However, there certainly are significant consequences for failures to comply with OFAC sanctions. We've heard plenty of news about penalties from the thousands to the many millions of dollars, and occasionally prison sentences. Is that something that you can elaborate on further?
I mean, I'd say that you should be worried about those sanctions enforcement cases. The mantra of OFAC these days is better compliance through enforcement. And that means that they will teach lessons to industry through failures of other industry players. And OFAC has been increasingly aggressive with enforcement actions. They've already had, I think this year, more than they had all of last year. And they actually do look to try to focus on different industries and industry sectors. So from my perspective, it is not a question of if there is going to be a relevant sanctions enforcement action, but when it's going to be.
From the compliance perspective of an exchange, I'd say that that's definitely something that's been on our radar from day one. The risk of either having something come up where, like you mentioned, down the road, now that SDN list includes the wallet addresses, that adds a whole nother requirement to exchanges like ours. So from the beginning, we launched in the US in November of 2017, and AML and OFAC have been something that we've been very cautious about ensuring that our program is running smoothly.
And also, I would add that enforcement, especially in the OFAC context, is something that has transcended administrations and become increasingly strict over time. I mean, I worked in anti-money laundering enforcement in the 2000s, and we handed out penalties in the tens of millions in some cases. Penalties in anti-money laundering and OFAC enforcement cases dwarf that these days in large ones. So this is something that is not affected by changes in politics, really. Well, those are considerations regarding the costs of failure. However, the efforts to not fail and to actually comply with sanctions can be quite expensive. It requires people, it requires technology, resources. And Haley, I think this is something you're as well equipped to talk about as anyone, since you've been dealing with these very issues.
Yeah, so I think everyone in the room probably has come to terms with the fact that compliance is an unavoidable cost to doing business, especially in the US and in the crypto space. I started my career in crypto at Silvergate, where the bank was very concerned about how companies were following compliance efforts. And so when we launched Bitflyer in the United States, we spent a lot of time and resources building out a team, building out a program, and sampling vendors, determining who would be best suited to help with things like OFAC screening, blockchain monitoring. But where the cost really comes in, even after you enlist the help of personnel and hiring and vendors, is then also doing things like quality assurance. We've had regulators who expect us to actually do quality assurance on the vendor we use for our OFAC screening to ensure that that vendor is in fact updating the SDN list in real time along with OFAC. And then also doing sort of quality assurance and model validation of our systems, making sure that as information is coming in from a customer and we're learning who our customer is and going through the onboarding and KYC process, that information is then sufficiently being pushed to the vendors that help with blockchain monitoring and OFAC sanctions. So it's those little things that after you determine who will help you if you're building a proprietary system on your end that will interface with the SDN list in some way, like how to actually ensure and prove to regulators that it's efficiently working.
An interesting thing there too is what you've just described is a lot of what traditional financial institutions would normally employ, and you still have to do that now because that's what we're faced with. But I think blockchain and the potential for blockchain analytics to more effectively understand both sanctions and AML risk, I think, is something that needs to be better understood by policymakers to how we can actually go beyond what they're looking for and achieve more effective compliance in this space.
And it's important to note that OFAC doesn't prescribe any particular type of compliance program. OFAC will say that you should have a reasonable risk-based compliance program, but the costs of not doing an effective one at the start means that if OFAC or another regulator or enforcement agency comes knocking at your door, you're going to spend a significant amount of resources, perhaps for months or years, digging yourselves out of a hole, paying lawyers like me or consultants and others a lot to try to not face an undue penalty. So it is worth putting that program in place at the start, as the Undersecretary said this morning.
And they just issued guidance on what a compliance program should look like. Is it last week?
That's right. They're called a framework for compliance. I think it's just Google it and OFAC compliance commitments and you'll see it. They're not onerous. They give you some start. And the nice thing about it is they not only give you the commitments, but they also have something that says the root causes of some of the failures in the past. And I think in a 4 or 5 page document, it can be incredibly instructive.
Now, those are some of the, a number of the ways in which OFAC and other regulators have tried to be reasonable and give the industry opportunities to comply. But in your experience, each of you, are there, for various parts of the crypto industry, problems in getting the right kinds of people, getting the right kinds of systems? Has the expertise available caught up with the number of crypto companies out there that are needing people?
I mean, in my experience, there is definitely a learning curve that's involved in this industry. No one really is an expert in how to do all of the things that we're required to do, but as a new technology and old law. So I think there's definitely been a learning curve in terms of some of the transaction monitoring, blockchain monitoring, and the vendors that have come out of that, the companies that have come out of that to help. But in general, I think within my experience, we've built a team that has done a very good job in figuring out what can be automated and what needs that human interaction, what needs that human judgment. When it comes to the sanctions list, at the very simple version of it is having you running names through the SDN list, and there's complications even with that. Someone puts in a middle name when they type in their name into your product, but on their driver's license it doesn't have a middle name. In Japan, there's kanji characters or Arabic lettering. How do those translate into plain English where it can be run through the SDN list and ensure that you're catching what you need to catch? So those things are where the learning comes in and sort of problem solving on the spot, but it is important to solve those problems before you are fully launched and operational and, you know, potentially making any sort of mistakes or violations.
I just say that solving those problems is a continuous evolution of a company. You get the best program you can at the start, but you're always going to have to make improvements. That's part of the compliance commitments about testing and auditing and risk assessments to see how's your program today, and then in 3 months or in a year, how's the program based on evolutions in the technology and evolutions in what's being seen in the private sector. One of the big banks that has been doing this for decades got a penalty from OFAC about a year ago because that identified a deficiency but didn't fix it quickly. So it was great to identify the deficiency. That's what compliance programs do. They constantly improve. But when you identify a problem, you've got to fix it right away. Otherwise, you violate the law and get a penalty.
John, you were mentioning that bank enforcement action raises an interesting issue because one of the experiences from the AML enforcement area and past OFAC enforcement is that the multiplicity of regulators at both the state and federal level complicates things greatly. The reasonableness of the regulators is something that I think will be very important in the years to come. And in OFAC sanction enforcement, you've had the federal government, you've had the New York Department of Financial Services. So is this something you can maybe comment on for the audience? And of course, I'm sure everyone in the audience is quite familiar with the New York BIT license and the different regulatory regime that New York has. And perhaps you can talk to the audience a bit about how that translates into the OFAC context.
Sure. OFAC's always tried to work with a variety of regulators, both the regulators and enforcement agencies, because often in the case of the major financial institutions, when we saw things that they had done wrong, violating sanctions, there was an interest on both sides to have global settlements. And so you might see, even with cases that were reached the past few weeks, of the case of Standard Chartered and Unicredit, still today, you're seeing a multiplicity of state and federal regulators that are signing on to the resolution of the case. And that's been the norm for the past decade or so in the resolution of these major enforcement cases. There were some periods, I think 5 years ago or so, where you saw New York DFS that somewhat went its own way on some of these cases, but by and large, most of those were reached together. And today, I think you'll see all of the regulators and enforcement agencies generally signing on together, although, to be clear, they all have their different versions of the law. OFAC, for example, as the federal agency, will be the one that determines whether or not there was a violation of the sanctions. But for example, New York authorities might look to see whether there was a books and records violation, a state law violation, and the two may be very different. There may be things that do not violate sanctions that New York DFS would say violates the transparency required by books and records.
And just to address kind of the combination of your last question about compliance personnel and then this one with state and federal, I think it's just important to remember that compliance personnel dedicate their lives to promoting law enforcement objectives, spotting illicit activity, and they're real allies to policymakers and law enforcement. I just think that should be remembered as they go forward with companies in this space, particularly states, to work with them.
Absolutely. The line always was, we at OFAC, when I was there, we make the rules, and everybody else in the private sector has to implement the rules, and one is a tougher job than the other, I think.
Okay, well, those are some of the issues of dealing with the multiple jurisdictions that exist in the United States. But of course, in an industry as inherently global as crypto, there are multiple different national sanctions regimes that would have to be complied with. And Haley, is that something you can discuss a little bit, how different national sanctions regimes affect sanctions compliance?
Yeah, so BitFlyer is operational and headquartered in Japan, EU, and the US, and obviously as we were working to develop our program here, we shared a lot of information with Japan. Japan has other sanctions, things like the Japanese mafia that they are concerned about, and those are sort of their sanction regimes that they focus on, but what's interesting about crypto is that it's a global currency, but there's not global regulation. So figuring out how to, in our case, have something like an open order book or connecting customers from different jurisdictions, all of a sudden an OFAC requirement facilitating transactions on behalf of these two parties, OFAC then comes into play. So, earlier I mentioned already the sort of kanji characters and some of the issues that arise when there's, different languages and different typographies around the world. But it's been, in our journey, it's been creating 3 pretty independently operating compliance programs in 3 jurisdictions, and then coming back and working on the sort of umbrella global governance and how that can interplay into sort of sanctions overlaps or what should apply to all 3 entities.
Well, we have only a few minutes left, and I think we've barely scratched the subject of a very complicated and very deep subject. Much of what we say here is probably going to be changing considerably in the near future. This is a very dynamic area. The industry is constantly evolving, and I think probably maybe a big picture look at how OFAC has viewed the crypto industry and what its approach is likely to be as developments occur is the best way to sum up. And each of you, are there things that you'd like to say about that?
Well, I just, kind of one thing that I see is maybe an issue that's going to be on the horizon, maybe not so much today, but in the future is as OFAC starts designating wallets on the SDN list. Right now we only have 2, I believe, but that may grow. This SDN list is over 300 pages. I mean, if you print it out double-sided, it's this thick. So what I would, as they may add more wallets to that list, and given what I had mentioned at the beginning, this broad scope of sanctions compliance, which is if you have an interest in that property, if something like Bitcoin were to pass through that wallet 10, 20 hops ago, when do you know for sure that that wallet 20 hops ago, that the holder of that no longer has an interest in the transaction going forward? I think that will impact the fungibility of this industry, and I think that's something that we need to explore more with OFAC before we start to get to that place.
I think the additional comment I'd make is that if you look at the headlines any day of the week, you're going to see Iran, Russia, North Korea, and Venezuela is top headlines that the U.S. government is concerned about in seeing legitimate national security and foreign policy crises. You're talking about close to war in some of these cases when it looks like the activities, whether you're detaining a North Korean vessel, what's happening with Iran. And the reason that that's important for you is that there's going to be very little tolerance for a company that violates the rules. Even if you made a mistake, OFAC's going to say you should have known better if you don't have a top-notch compliance program looking at it. So be very careful because you don't want to find yourself part of that headline.
Yeah, I mean, I think to Amy's point, I think the idea of sort of this tainted cryptocurrency is an interesting one. As soon as OFAC announced their intent to add wallet addresses to the SDN list, I think that raised a lot of questions about how effective that will be and how many wallet addresses that means will be added. There's also sort of this requirement or suggestion that companies within the space, as they determine other wallet addresses that are connected in some way to suspicious activity, obviously, and the SDN list, be reported. So I think we're going to see more of that sort of self-reporting of wallet addresses to OFAC. And hopefully, there's a lot of sort of working groups that are in the space. Bitflyer is a member of the Virtual Commodities Association. Amy's part of the Digital Chamber of Commerce. These sort of organizations hopefully can start to have a bit of dialogue in the best way to handle these sort of arising questions and opportunities for us to continue meeting the compliance needs in the space.
Well, thank you. I think we've heard things that should make everyone in the audience think a great deal about the great significance of complying with U.S. OFAC sanctions. And I hope we've also given people a lot of food for thought on things they need to learn further. This is going to be a dynamic area, just as dynamic as the crypto industry as a whole. And developments here are something that everyone in the crypto industry should be following. So thank you, and I hope that we've enlightened everyone.